What's up, Tesla lovers? Welcome back. Had to get this video out on Tesla's Q2 earnings they just reported tonight. Want to go over some key takeaways, some highlights, and what I thought. I'm feeling pretty sick, but I really wanted to get this video out before I croak. So here we go. So the biggest takeaway I would say is that Elon said that they are open to licensing out full self-driving to other auto OEMs. And there was also a tweet by Tasha Keeney from ARK Invest saying that one OEM is already in talks with Tesla. So exciting stuff happening there. This is just following the trend of Tesla setting the industry standard. The dominoes are going to keep falling. We saw it just happen with the NACS charging standard. Oh, I'm sure more are going to follow. I mean, at this rate, the other automakers, they're going to be using Tesla's chargers. They're going to be using Tesla's FSD. Maybe Tesla should just build their cars for them too while they're at it. I mean, I'm only half kidding here. But yeah, so let's get to the earnings report here and make sure you stick around to the end because Elon even gave us a masterclass on investing that I'll touch on toward the end here. So let's do this. So I thought this was a fantastic report, despite what the headlines will say, because Tesla reported record quarterly revenue of $25 billion with a just under 10% operating margin. Now the bears are going to say, they're already saying, Tesla's just a car company, their high margins are gone. Yet, I think back to, this is something Peter Lynch, legendary investor, had said, if one needs only open their ears and listens, okay, Tesla outlined clearly their strategy here. This is a company that is doing that is saying what they're going to do, then they're following through, they're executing on that strategy. So the strategy they outlined was as follows. It's to sell the highest volume of cars while maintaining a healthy enough margin to enable them to continue to invest massively into what will drive the future of the business. Artificial intelligence, robots, obviously we've got a bunch of other products coming too. So put another way, they have a very ambitious and clear long-term plan, and they have the roadmap on how they want to execute it. Okay, they're doing it in a very calculated manner. So they're running this efficient operation with no plans to slow down their innovation. Now, they're prioritizing the long-term health of the business, as they should, instead of focusing on these short-term margins and catering to what Wall Street wants. All they care about is quarterly results. They don't understand long-term plans and visions. They just want them to window dress in the short term, get a couple margin points higher, which would ultimately put Tesla in a weaker position. And we've seen this happen time and again. I mean, look at the great companies rise and fall. Why did they fall? Because they became complacent, stopped innovating, stopped thinking about the long term, and instead just focused on quarterly results. See General Motors, IBM, and many more, for instance. Now, the Tesla Model Y was the #1 vehicle sold of any kind in the world, which is absolutely insane when you consider it only went into production in 2020. This is still a relatively new vehicle. I'd say that's a pretty big deal. They're on track to hit this 1.8 billion vehicles sold this year target, which would amount to another 50% growth, which when you get to this size is like extremely difficult. I mean, it's incredible that they're even getting close. These companies this size don't grow 50% a year. They briefly mentioned robo-taxis, how they're going to have the most units sold by far, and they're going to also follow a revolutionary manufacturing process. Now, we've seen this play out time and again since the Model 3. Tesla continues to not only release industry-leading technological innovations on the product side, but perhaps even more importantly, they innovate just as much on the manufacturing end, which in the long term is really what's going to set them apart, and they've kind of said that in the past as well. On autonomy, they reiterated the importance of data and how Tesla has the most with their fleet of cars. Everyone's got the full self-driving beta that paid for it. So they're far ahead of the pack when it comes to autonomy, perhaps even by an order of magnitude. So, you'll often see Cruise, Waymo, I mean, these other systems just operate in geofenced, pre-mapped locations. They're essentially like trains on a track. Whereas Tesla cars are thinking for themselves, they're actively making decisions, and they're rapidly improving. So it's incredible that in a few short years, Tesla has basically taken full self-driving, which was a fetus, and it's now like a kid driving with their permit, and they're getting better every day. And when it's 21 years old, it's going to be a really good driver. As long as it can stay off TikTok, it'll be a better driver than humans. Problem is all the humans are on TikTok, so there you go. So they now have 300 million miles worth of data from the full self-driving beta, and yet this number is going to be inconsequential shortly because there's so many cars being sold, there's so many people opting in for the FSD beta and using it more and more every day. Soon they're going to have billions of miles of data, miles driven. So we see it consistently improving, and they see a clear path for full self-driving being 10 times safer than an average human driver pretty soon. Now, globally, adding to Tesla's competitive advantage, their moat, they have 50,000 supercharging connectors at 5,000 locations. The rest of the world, I'm sure, is soon going to follow the trend we've seen play out in the US with the adoption of the NACS charging standard, which was led by Tesla. You've already got Ford, GM, Mercedes. They've all opted in. Many other OEMs are going to follow. They don't really have a choice at this point. They simply didn't have the foresight to make EVs, let alone the charging infrastructure. Now, if we take a look at their financials, I'll highlight the key parts here. So every segment grew massively year over year, but perhaps the most notable was the energy segment, which is still quite under the radar, but it's just incredible what they're doing. I mean, it grew 74% year over year. Okay. Services and other revenue grew close to 50%. But I'm really excited for the future of this energy generation and storage revenue. It seems like it's starting to take off, like I said, huge growth year over year. We know they've been innovating on that front. I've written about it on my Substack, which you can find the link in the description below. I've written about it. The mega packs are incredible. The way they produce the mega packs there, they make them in the factory. They're already in the concrete. They're ready to basically be dropped and installed at the charging locations. Like, there's no installation time. It just goes right in. They're ready to go very quickly. Again, they're just innovating. They give you the full package of innovation from how these things are built to what they're capable of. So I think energy is going to be huge in the long run. It's going to keep growing here. Now, Tesla generated $3 billion in net cash. They put $2 billion pumped right back into the business and capital expenditures, which they said they want to maintain healthy enough margins so that they can continue to reinvest in the business while also maximizing the volume of their production of cars and energy. So $2 billion back in the business. That left them with $1 billion in free cash flow, and added to their cash position is now up to $23 billion. So they've got quite a bit of cash, a good healthy buffer, what you want to see. They've got one of the healthiest balance sheets of the S&P 500. So they're continuing to invest heavily back into the business, as they should. No one has anywhere close to as compelling of a pipeline of products, okay? When it comes to AI, full self-driving, the Optimus robot, they've got Dojo, the supercomputer. We've got the Cybertruck coming, the next generation platform, the semi-truck, Robotaxi. They've got quite a lineup here. They're busier focusing on those products than worrying about a couple percentage points in the short term. Elon Musk on the call said, "I think it's ridiculous that we have positive free cash flow in a capital-intensive business while investing massive amounts of money in new technology. That is super hard." I really wouldn't gloss over this, because when you think about it, Tesla's really like 10 startups in one. I don't think this has ever been done before. Usually as a startup maybe has one good idea or product and it's burning money trying to achieve it. Tesla's over here doing 10 different things. They're juggling all of these seemingly unrelated different fields and products, but that they have made into this cohesive ecosystem of cars and energy, batteries, robots. It's all coming full circle. You've got this extremely calculated approach, and with a dual focus on maximizing efficiency, but also constantly innovating, not taking their foot off the pedal. I mean, it's absolutely incredible to see the incredible big things they're able to do with seemingly small amounts of money. When you compare that to companies like Meta, like Google, that have been around a lot longer, that have much deeper pockets, that have just been incinerating money for the last few years, and they've had to, cut costs and cut back on their employees, but they don't really have much to show. I think this is a huge testament to the quality of employee that Tesla attracts, and the empowering nature of their company's culture, which is so crucial. I just don't see how anyone's going to catch up. Not as long as those things continue. And, add to that fact, this constant funnel of the best talent they get year after year. Tesla and SpaceX go back and forth as the number 1 and number 2 desired work destinations for graduating engineering students. The companies that win out in the long run tend to be the ones everyone wants to work for. We know other companies are starting to copy Tesla's gigacasting approach. Shocker. Which, has obviously greatly reduced costs and complexities. Again, just goes back to this continuous innovation on the efficiency side, and Tesla just continuing to set the industry standard. Elon even anticipates that the Optimus humanoid robot is going to be carrying out useful tasks in the Tesla factory next year. So I think that you're going to see a huge impact, maybe not huge in the beginning, but a notable impact that's going to grow over time to the balance sheet long before these robots are even sold to the public. I mean, just think about all of the menial tasks that you can designate to a robot now. Again, the efficiencies are just going to continue to increase, and then that gives them more time and money to focus on innovating. Thought this was super interesting. Tesla drivers are now able to charge on solar, so they can charge their vehicles with the excess solar from their Tesla solar panels. They can then drive using only sunlight that hits the roof of their home. Sustainable energy, full circle. Why aren't ESG and all these environmentalists rejoicing over Tesla? We could put our tinfoil hats on, but I think it's obvious. And to top that off, Elon even touched on how the convergence of Neuralink and robotic limbs that Tesla's producing for their autonomous Optimus robot are going to enable amputees to walk again. I mean, this is the same man the media wants you to hate. Absolutely mind-blowing. All right, real quick, Elon's investing masterclass, absolute golden nuggets here, and then a quick wrap up. So we got a little masterclass on investing in the earnings call. Elon basically said he thinks buy and hold investing is the way to go. And, to paraphrase, he stated, identify a company whose product you love. Does it seem like they'll continue to make great products? Buy that stock and hold it. That's it. You will win. Buy stock in a company that has a great future pipeline. Really interesting. Really makes something seemingly so complex a lot more simple. Obviously, there's more to it, and you want to be aware of companies' balance sheets and cash flows and debt. But at the end of the day, this is probably the number one thing to focus on, and then you can kind of do your homework after. Makes a lot of sense. I mean, I think about the companies I use and have been using the last 10 years. They're all thriving. Apple, doing this on a Mac right now. Obviously everyone's got the iPhone. Things like Netflix that obviously killed it the last 10 years. I've been using that for 10 years. Now I think it's Tesla's turn. He stated, provided you're confident about what the company's products or services are, when the market panics, buy, and when the market is overly exuberant, you can sell. Buy low, sell high. A little more difficult to do with Tesla. I mean, that's obviously more expert level. I mean, it's very difficult to time the market, as we know. And even paraphrase Warren Buffett, this is probably my favorite part. He said, imagine you're living in your house and some crazy manic depressive guy comes and stands outside your house and yells property prices at you. It's a different price every day, but the house is still the same house. This is the stock market. That's spot on. I mean, these are the things to think about whenever you're thinking of selling, buying, when you're panicking, when the market is crashing. Just think about that. What do you actually own? Stock prices are absolutely meaningless. 2022, Tesla had their best year ever. They were selling the most cars they ever had. They were making the most money they ever had, and the stock price dropped 70%. It is absolute lunacy. It's clown world. In the short term, obviously, volatility abounds. But, I think it's helpful to just write out on a piece of paper or a Google or a doc somewhere what your investment thesis is, why you believe in this company. And if that hasn't changed, why are you making your sell decisions based off the stock price? Definitely a mistake, I've made in the past. I let my emotions get to me. And, as a seasoned investor, I think I've gotten a lot better about that. And I have systems in place so that I don't make impulsive decisions and I, based on stock prices. Still do it from time to time, but it's a work in progress. Really goes against all of, human nature, psychology, really, yeah. So to conclude, 2 quotes and then a couple more, and then a couple of my key takeaways. Elon said, you see a lot of companies, AI companies doing LLMs, which is a large language model, basically ChatGPT. If they're so great, why can't they make a self-driving car? Because it's harder. It's funny, recently, I was just tweeting about this. Andy Jassy, Amazon CEO, was stating how he thinks that we are in the hype cycle of the AI, industry. And what follows the hype cycle is the substance cycle. So you're seeing these early big names in the AI space, Microsoft, Google, with their little chat bots and chat plugins. But, I think of a company like Tesla who years ago started building AI out into the physical world, and they really are like one of the only companies still doing it. It all started with full self-driving. Now we're getting this humanoid robot that these things are thinking for themselves. The car is a computer on wheels. It is actively making decisions. Everyone else is making chatbots, and that's great and all, but which company do you want to be in? I mean, to me, it's an easy decision. That's why Tesla's, my biggest holding. Elon also said, in classic Elon pump fashion, I see a path to a 5x or 10x increase in the value of the company. This is obviously over the long term, not in the short term. Short term, anything's going to happen. It's going to be volatile. It's going to be a bumpy ride. But they're going to continue to maximize production, focus on cutting, driving down these costs continuously. And that's why, to me, I really believe Tesla is a generational buy. Short term, I think you can obviously expect lots of manic depressive stock price behavior. It's just the way the stock market works. and we're seeing the stocks already tanking in after hours post earnings. It's definitely going to be a bumpy ride, but when I look out to 2030, the future is looking extremely bright. If you enjoyed this video, please don't forget to like, subscribe, check out my Substack in the description below. You could also follow me on Twitter there. This is Vinny from the Investment Club, and I'll see you next time.